Hello, hello. Good afternoon. Hi, everyone. Are we all here and ready for this session? Have we read Regulation 5 for the L&D account? All right, so we're going to be continuing. This is session 3. We have had 2 sessions already. The first one was on test date succession, the second on intestate succession, and the last one, which is today, it is the liquidation and distribution account. I say that this is the easiest part of the work, so work with me so that you can grasp this well and do well in the paper. So as I was going through the notes, I realized that the notes are quite a lot. So the things that you have to know for the L&D account are a lot. So I think today we might just stop at income and expenditure. I think that is sufficient because if I add on estate duty to it, I think that it's going to be information overload. Now I know this is a live and then you can come back to it and rewatch whatever part you want to watch. But for the sake of just being able to grasp certain concepts correctly, I think that it will be good if we stop on income and expenditure, or maybe fiduciary assets. We'll see how far we get, and then we can do the estate duty addendum separately, because then after income and expenditure there isn't really much to do except the estate duty addendum, and that's where a lot of people experience challenges. So we want to make sure that everyone gets it. Like, I really want all of you guys to get it. Like, even if you don't get it like 100%, get it like 90%. Like, get it like 90%, like know what to do. Don't look at the L&D question and be like, what am I going to do? What are they asking me to do? What is this policy? What is this? What is that? So I don't want you to have a hernia during the exam. I want you to go in there confidently and come out alive. Right. So let's get into things. Okay, let me just share my screen. We are on session 3 right now. I think I need not to introduce myself, but if you're just joining session 3, my name is Shella and I'm an admitted attorney. So once upon a time, I was where you are. I was a candidate attorney preparing to write board exams. And I did not have, to pay for tuitions and things like that. So I started, helping out candidate attorneys for free because I know what it's like to, experience the not having help and just, the whole just not having help. It's difficult. So that's why I started this channel and, started these sessions to help out those who need it. And then, let's see. Can everybody hear me? Can everybody see me? Please write in the chat box. Like today, those of you that were in on the first session know that I want you guys to abuse the chat box and these like flying emojis, please, because I don't want you to feel like I'm speaking alone. Speaking alone for like an hour plus is not easy. So abuse the chat box so I know that you can hear me and you can see me. Okay. So we've got the liquidation and distribution account, which is the easiest part of the paper. So before we even get to anything, I want you to know that the L&D account is the easiest part of the paper. So even while you are studying and you're practicing the L&D account, keep it in the back of your mind. that this is the easiest part of the paper. So I stressed that you need to know Regulation 5. There's absolutely no way you can pass this exam without knowing Regulation 5. Please know Regulation 5 if you want to pass. Like I told you in the previous session, I will come to the exam venue and I will scratch your face if you don't know Regulation 5. Because if you don't know Regulation 5, I don't know how you're going to do this. So, Regulation 5 is extremely important. Now, getting to the L&D account, you will see that every single subheading, these 9 subheadings that appear, are in relation to Regulation 5, except the estate duty account. When we deal with the estate duty account, we have another governing act, which is the Estate Duty Act. So then we don't use this part of things, interstate succession or whatever it is. We use the Estate Duty Act. That's the act that we're going to use. So that will do later on. Right. So we've got the 9 headings. This is how I remember the headings because remember, like I told you, Regulation 5, it says that you need to have the headings. You need to put in the headings in your L&D account. So if you don't know the headings, you won't know what to put. So how I memorize the headings, I say, holy moly, love really destroys individuals in financial and economic crisis. Now, this statement is true because love really does destroy individuals who have no money, but it'll also help you remember the headings that you have to put in the L&D account. So during your reading time, you can just put in there so that you remember the different types of headings and what to do. So the first thing first, heading. Heading is important. Heading carries marks in the L&D account. So how do you know that you have grasped things for the L&D account is when you look at Regulation 5 and you see what the regulation says, and you know what the regulation says, and you know how to apply it to a set of facts. That's when you know that you know. Because even when you look at memos, you can see that you are marked according to what's in the regulation. So, for example, the heading, right? You've got the heading, and these are the different ways that you can write the heading. Now, when you read the regulation, the regulation states that you need to put there, is it a first and final liquidation account, or is it a second, is it an amendment? You need to know what type of liquidation and distribution account it is. So you're going to get a mark already by writing first and final liquidation and distribution account. That's already a mark. And then in the estate late of the regulation also says that you need to put the full name of the deceased, and then you have to put the date of death. Guys, if there's one thing you must know when it comes to the L&D account is the date of death. Not only for this, but you will see as we go on in the notes that the date of death is important because it's going to determine so many things and where you put certain things just by knowing and being mindful of the date of death. So putting also the identity number, all these things are stipulated in Regulation 5. So this is how you write a heading. So obviously you will write the heading differently based on the set of facts. Don't cram this heading and say, "Oh, first and final L&D account in the estate late, in the estate of the late, blah blah blah," and then you cram it, and then after that you just get to the exam room and you just write whatever you write, whatever you have crammed. No, that's not wise. So you need to read the set of facts and then translate the set of facts to the information that you know because you have studied. And then the master's reference, also very important. Usually in a set of facts, you will not get the master's reference. You will have to create your own reference. So create your own reference. Where you don't have certain facts, create them. For example, here's another trick that you might find in the exams. You find that you're given a set of facts and you are given the deceased name, but you're not given the last name. You must create a last name. Why? Not because I said so, but because the regulation requires you to put the name of the person, the full name, as well as the surname. So even in practice, you can't have an L&D account that only has a person's first name. It needs to have the person's names, like the full names. So that's why I say that the act or the regulation acts as a memo to the stuff that you have to know. So regulation 5, super important, can't overemphasize it. So these are the different ways that you can write the heading depending on the set of facts. Remember the master's reference, there are certain things that will not be provided to you in the paper. So you have to, just come up with certain things, come up with names and stuff like that. All right, so are we good on headings? All right, perfect. Moving on to the next thing, which is a money column. Now, I don't stipulate these things. It's the regulation. So we go according to the regulation. Because if it was according to me, in all honesty, I wouldn't have a money column because, oh, why? Because I'm not so good with math. So just having like these tables and all these things just confuse me. But it's not my prerogative. What? It's the regulation. So we do what the regulation says. All right, so which one is the money column? The money column is these columns here where you see breakdown of amount, credit, debit. So you need to have these lines like these columns. It's stipulated by the act. And then I also just want to ask, why do we have the number 23 in brackets on voucher number? Can somebody just like, why? Why is it there? Does anybody know why there is a bracket on the voucher number? Why can't I just write 23 and not have the bracket? Yes, it's a voucher that needs to be presented to the master. That's true. But why is the voucher in brackets? Why can't I just write 23 on the voucher number? Okay, so I can't write 23 only because that's what the regulation says. The regulation is your guide. If the regulation says put this thing in brackets, you put it in brackets. If um the regulation says you put a heart next to it, you must put a heart next to it. If the regulation says you must circulate, then you must circulate. So what I'm trying to say is that you take the regulation seriously because that's how you show that you know the content of the work. Um Iluntle says, isn't it an amount we less? No, 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 no. Okay. The voucher number. Let me explain this table in front of you because this is the basis of drawing up a liquidation account. Never mind the things that are in here. They might look a bit intimidating right now, but as we move along, you're gonna be like, oh, this is literally the easiest thing ever. So in the L&D account, the first column you will see here, it says name of asset. Now, you're not going to write name of asset in the exam. That's not what you're going to write. But I put it here for you so you know that you have to write the name of the asset in the first column. You cannot write the name of the asset at the end column or the middle column. No, the name of the asset needs to be the first thing that you write, right? And then the next thing is the voucher number. Now, the voucher number, they're not going to give it to you in the exam. They're not going to say, This one is voucher number this, voucher number that. If they do, use the voucher number from the paper. But if they don't, the voucher number is just you putting things in sequence, because you will see later on in the L&D account that sometimes you'd have to refer to certain vouchers. Now you wouldn't have to write them out in full. You can just say voucher number 23. And the person who's marking your paper goes to voucher number 23 and they see that, oh, voucher number 23 is, for example, immovable property. They know what you're talking about. So that is the voucher number. This amount, you can never add it or subtract it. If it has been given to you in the set of facts, you write that number that you have been given. But most time, in most papers, I've seen that they don't give it to you. You create your own. After you write an asset, for example, you write movable property or immovable property, then you put the voucher number 1. And then the next one is, let's say, a car. You put and you describe the car, and then you put voucher number 2. And then let's say you get to the liabilities, and then one of the liabilities is the advertisement for creditors, voucher number 3. So your L&D is going to make sense like that when you put the voucher number. This number, like I said, you don't add it, you don't subtract it to anything. That's you just identifying the asset or the liability. Does that make sense so far? So far, does it make sense? Okay. So far, it makes sense. Now comes this third column. Remember, the regulation says you can have 2 or 3 columns. It's your prerogative. So after voucher number, you can have credit side and debit side, or you can have 3 columns. You can have this breakdown of amounts or credit or debit. The regulation has not stipulated how many columns you need to have, but I put this breakdown of amounts here. You know why? Some memos also have this part. The reason why I like this column, I put it here. You can leave it out if you feel that you're okay with having it. The reason why I like to put it here is to make things easier for me when I calculate. So then I will see that where I make a mistake. Then I also come to this column to see where did I miss it on the amount that I have to add up. Maybe let's say 200 plus 50 rand. Maybe I say 2,500 and I only put it in the credit. If I don't have this breakdown of amounts column, I won't see where I went wrong. Because if I've got this breakdown of amounts column, then I'll see that no, 200 plus 50 is 250, not 2,500. Then I can correct what I've written in the credit. So for me, I just like to have it for purposes of clarity, so that if I'm adding on the credit side and the debit side and things are not adding up, I can also just check what I did here, so that it just makes things so much easier for me. And then you've got your credit side and your debit side. On the debit side, where there's nothing here, that's where you're going to put all your assets. That's going to be the debit side. And then the credit side is going to be all the amounts that have to be subtracted from the estate. For example, your advertisement to creditors. It can't be in addition to the estate. No, it's a subtraction, because this is what you're going to pay to the local newspaper and the government gazette. So money column, are we okay with money column? If you get an L&D account and all you have to do is write a heading and draw a money column, would you know what to do? Okay. So far you've got heading and you've got money column. Now you're running on about 5 marks in the exam. Remember, you pick the lowest hanging fruit. I remember when I wrote this exam, I was like, what I know, I will know it to the best of my ability, because I'm going to do it well. What I don't know, I will improvise. But you're not going to improvise, because you're going to know everything. So we have done the money column. Right. So now we have dealt with holy moly. Now we come to love, which is the liquidation account. Please, if anyone is already feeling intimidated by if anyone is already feeling intimidated by the liquidation account, please don't make me jump from this phone and strangle you, because it is so easy. And the liquidation account is extremely important because if you get the liquidation account wrong, your amounts are never going to balance. I'm not saying might not balance or maybe they can balance. No, they are never going to balance, because you will see as we go further along that if there'll be certain parts where you have to, for example, when you get to the distribution account, you have to write that the first thing you write on the distribution account is balance brought forward. Where are you going to get that amount? You get it from the liquidation account. If that is wrong, already your distribution account is shaking. So this part is extremely important because it's going to guide so many things. Even in the estate duty addendum, when you get to listing the assets, you have to look at the liquidation account. So please, here you need to pay attention. All right. So let's go. We've got the liquidation account. Guys, if there's one thing, I always say if there's one thing, and there's so many things. Let me not say if there's one thing. If there's one of the many things that you need to know about a liquidation account, is that a liquidation account lists all the assets and liabilities of the deceased as at the date of death, set out in detail. Now, let me spend a little bit of time on this date of death, Shandis. Assets and liabilities of the deceased as at the date of death. So, for example, let's say the deceased has a house, all right? The deceased has a house, and there are tenants who live in the house, and they pay rent. They pay rent to the deceased every single month. And now the the deceased has died. The deceased has died, let's say on the 15th of March, and the tenants pay on the 1st of every single month. So we've got the deceased who's got a house, the tenants stay in that house, and they pay every one on every first day of the month. Right, that's the agreement. When the deceased dies, the asset that you put in the liquidation account is what? Is the house. The house, because that is the asset at the date of death. Don't put the rent, because the rent is coming 1 April. 1 April is after the date of death. So you cannot put that in the liquidation account. So you see why it's important to ascertain at the date of death, because anything that comes after the date of death cannot be in the liquidation account. Send an emoji if you understand, say yes, because I can't move forward if you don't understand this part. Says yes. Okay. Now, question is, so what about the assets and the liabilities that come after the date of death? Where do those assets go to? Does anybody know? What happens to assets and liabilities that come after the date of death? Thank you. After the date of death, those assets are going to be in the income and expenditure account. Income and expenditure. So the big difference between liquidation account and income and expenditure is that the liquidation account deals with the assets and liabilities at the date of death, and then everything thereafter will go to the liquidation, I mean to the income and expenditure portion of things. So we understand that part. Now, assets here, like we said, it's assets and liabilities that you're going to put in the liquidation account. Now, in the asset part, you've got movable property. Please know what movable property is. Immovable property, and then assets reduced to cash. Another word for it is what? Another word for it is claims in favor of the estate. So you can put assets reduced to cash or claims in favor of the estate. These are assets that essentially have been reduced to cash. So what do? Then you will start when when you draft your N&D account in the exam, you will start by writing the words assets and then that's a subheading. Also, let me just put it out there. When you start writing your liquidation and distribution account, you're obviously going to have your heading. After your heading, you put the subheading liquidation account. Under liquidation account, you put the subheading assets. Under the subheading of assets, you write immovable property. Then you start listing all the immovable property that has been given to you in the set of facts. So over here, you've got, the immovable property. So you don't just write, let's say it's a house. You don't just write a house and then you put the amount. No, you don't write it like that. You follow the DVD principle. You start by the description of the property, and then the valuation of the property, and then the divestment. That is you putting who's going to get it and why. So you follow the DVD principle when you list the property. Now, if you have watched my previous video on the tips, the L&D tips, you'll know that by writing this, you've already scored a lot of marks. Just by writing, you haven't calculated anything. You haven't taken out your calculator. You know what an immovable property is, and you put it there. That's it. You put it there the way it's supposed to be there, and you will get marks. So what are you getting marks for? You must describe the property. You must put it there, the ARF number, the registration divisions, measuring, you need to put those because those are important, as well as the deed of transfer number. You might not get this number. Actually, I've never seen this number in the exam, but you will put it there. You will create your own little number. And then the description, you will also write in the description per appraised value or at valuation. You will usually get this in the set of facts. Then you'll just write whatever it is, at valuation or per appraised value. But usually appraisals are, for movable properties, and then valuations is usually for immovable property. So then you'll put that, and then the value, and then you put the value, which yes, I haven't put this in the table because I wanted to see if you guys understood what I was talking about in the money column. This 1.5 million rand, where are you putting it in this table? Where is the 1.5 million rand going to? On which side? Is it coming to voucher number? Or is it coming to breakdown of amounts? Is it coming to credit or is it going to debit? Yes, that's correct. It goes onto the debit side because that is an asset. And then here you see one, because this is the first thing that we listed in the liquidation account. So you continue like that, so that, your things are organized and they're in order. Then you write that this is your voucher number. This is the first thing that you've listed. Then now we've got another property as well. Deed of transfer, you write all of that. So you write all the immovable property under the heading of immovable property, and then movable property under movable property. Also continuing with the voucher numbers, Obviously in the exam, you're going to use a ruler and everything's going to be in one column. So then you put in the voucher numbers and then, you put in the amount on the debit side because this is the assets of the deceased. Now, let's talk a little bit about policies. Let's talk about policies, right? Does policies fall in the liquidation account? Policies, let's say life insurance policies, do they fall into the liquidation account? And if a person dies, let's say a person dies on the 15th of March, and they're not going to pay out the policy on the 15th of March. They will most probably pay it on the 18th. So where must the policy go? If it comes to the executor, it came 3 days after the person died. I see, yes, under claims in favor. Where does the policy go to? The deceased passed away on the 15th of March. Asupol paid on the 18th. Where do we put that policy? I see under claims in favor of the estate. Anybody else got another answer? But only the ones with no nominated beneficiary. Okay, guys, where do we put the policies? Do they come under, okay, see claims in favor of the estate, claims in favor of the estate. Okay, okay. You don't put it in claims, you don't put it in the claims in favor of the estate. I mean, you don't, yes, you put it in, sorry, you put it in claims in favor of the state. You don't put it in income and expenditure. The reason why you don't put it in income and expenditure, even if it came on the 18th while the deceased passed away on the 15th, the reason for this is that the policy matures when the deceased dies. So if the deceased dies on the 15th, we deem it that the policy is paid out on that date because that is the maturity date. Even if Asupal is giving you the runaround and they paid a week after, don't put it in, don't put the policy in income and expenditure. No, you must know when a policy matures. Now, there are two terms that I want to refer you to, and that is maturity as well as surrender. So, there's a big difference between maturity and surrender. So, maturity of a policy. Let's say that the deceased takes out a policy on behalf of, let's say, a deceased takes out a policy, right? And then the deceased then dies. We say that the policy has what? It has matured. If I take out a policy on the deceased and the deceased dies, the policy has matured. Do you understand? All right. So with maturity, the difference between maturity as well as surrendering is that with maturity, the life of the policy has ended because the person who is, the policy holder has died. There's nothing else to do. But then with surrender is when the person hasn't died, but the policy is terminated. So there's a big difference between surrender value as well as maturity value. So Let's go here. Let's look there on life insurance slash assurance. So only the life insurance policies that pay out directly to the estate are put in the liquidation account. What does this mean? This means that when they are for the benefit of another beneficiary, they will only be reflected in the estate duty addendum. Why is that? That is so because remember that the liquidation account deals with the assets and liabilities of the deceased at the time of death. So if there is a beneficiary and the beneficiary is another person, the beneficiary is not the person who died. So we can't say that the money that is paid out must go to the estate. No, the amount that is paid out must go to that beneficiary, not the deceased. But when the deceased is the beneficiary, then that is put in the liquidation account. Are we understanding life insurance policies, assurances, and things like that? So far, are we understanding policies and how to deal with them? So if you get, you must look at who the beneficiary is. If you get a question where there is a policy, don't rush to put the policy in the liquidation account. You read what the set of facts says regarding that policy. Then only do you say, oh, okay, no, there is a beneficiary who is going to receive this, who's going to receive this amount, and the beneficiary is not the deceased. Therefore, it cannot be in the liquidation account because the liquidation account is assets and liabilities of the deceased, Right. So we've got that one. Now let's talk a little bit about loans. Loan against the policy. Is the screen showing everything? Yeah. Okay. Loan against the policy. So, for example, 370,000 proceeds from the policy, and then 30,000 is a loan. In the liquidation account, you record 40,000 Rand, and then in the liabilities, you put the 30,000 Rand. Why do we do it like that? We do it like that because at the time of death, the deceased had the proceeds. At the time of death, the deceased was entitled to the proceeds, and then the deceased also had 30,000 Rand in their possession. Do you understand why we put 40,000 Rand? So that's the reason why we put 40,000 Rand. But then in the liabilities account, you will then subtract the 30,000 Rand because it is a loan. So when they say that somebody has taken a loan against the policy, you will take the proceeds of the policy and then add the loan. In this instance, it will give you no, sorry, it won't give you 40,000 Rand. It'll give you 400,000 Rand. Yes, it'll give you 400,000 Rand. So then you take the 400,000 Rand, you put it in the liquidation account on the part of the assets, and then in the liabilities you're going to subtract it. Does that make sense? Are we together? Are we all understanding? Okay, Belinda says she doesn't get it. All right, let me take this again. So is it policies in general that you don't understand, or the loan part? Let me take it from policies. Policies, right? Let's take it from policies. Policies that will be reflected in the liquidation account are policies that are supposed to be paid out to the deceased. To the deceased, right? That's that. So if there's a policy on the life of, if the proceeds are going to a beneficiary, You don't put it in the liquidation account. Those are things that you will deal with in the estate duty addendum when you deal with deemed property as well as actual property. So let's not stress ourselves about that. Now, when it comes to the policy, right? So if a person takes out a loan against the policy, right? So the proceeds of the policy are 370,000. Those are the proceeds from the policy. Then they have the loan, because when you take out a loan, you receive the money. So in your possession, you've got what? You've got the 30,000 Rand. Now, when you total that, you have 400,000 Rand. So this is not supposed to be 40,000, it's supposed to be 400,000. So the deceased at the date of death in their disposal, because remember, these are assets and liabilities at the time of death. So the deceased has 400,000 Rand. But you can't continue as if part of the 400,000 Rand is, the deceased. It's a loan that is supposed to be paid back. You reflect it in the assets because at the date of death, this is the money that the deceased had in their disposal. Does that make sense? These amounts, 370,000 Rand, as well as the 30,000 Rand loan, probably came in at different times, right? The loan will probably come in, let's say, while the deceased is still alive. But then the proceeds of the policy, they mature when the deceased dies. So when the executor comes and they look at the papers, the deceased in their bank account, now they've got 40,000 Rand. When they look at the reference, it got paid out from Asupol. But then when they further examine the statements, they can see that 30,000 Rand was a loan. So we cannot continue, with the distribution account with the loan as an asset because it cannot be an asset. So what you do is that because at the time of disposal, at the time of doing the L&D account, at the time of distribution, the person had 400,000 at their disposal. So that means it forms as an asset of the deceased. But because we know that in the 400,000, there's 30,000 Rand that's a loan, then we put it in the liabilities. And we say this estate must minus 30,000 Rand because now 30,000 Rand must go back to Asupol if that's where they took out the loan. So the 400,000 is the sum of plus, yes, we add the total, but have to subtract the loan on the liabilities, yes. Meant that we add the total in the liquidation, but we have to subtract the loan in the liabilities, yes. Why do we do that? We do that, I need you to know why we do it. Because if you know why we do it, then you'll be able to do it in the exam. Let's make an example with you. Okay, I'm not wishing death upon you, but let's make an example. People tend to grasp examples better when they're the ones in the situation. Let's make an example with you. You will have a policy with Asupol, you've got a policy, and they pay, and then upon the maturity date, they're supposed to pay out to your estate. They're supposed to pay out 500,000. But during your lifetime, hey, there was a time, hey, you had debt, your car broke down, you had to pay for board exams, you are paying for PLT, you are just a mess. While you're still alive, then you decide, you know what, this policy that I've taken, let me take a loan against the policy. So I can pay for board exam registrations, so I can pay for PLT full time, So you take out a loan, you take 30,000 Rand. You're like, yeah, I'm going to be okay with 30,000 Rand. When you die, you took out the 30,000 Rand, now you want to register for board exams. You haven't even registered for board exams, now you die. At your disposal, how much do you have? You've got the 500,000 because when you die, that's when the policy is going to mature. You've got the 500,000, and then you've also got this loan. Whether you've used it or not, the loan is 30,000 Rand, irrespective of that. So you've got this money at your disposal. So you put it, because at the time of death is the money that you have. We can't pretend like you don't have it. You have it. So we put it in the liquidation account. But as we continue with the liquidation account, we see that no, this amount is not yours. This amount is a loan. Therefore, you have to subtract it in the liabilities section. So that's essentially just how you do it. When you get parts where you have taken out a loan against a policy, you must add the proceeds, or you must add the proceeds of the policy as well as the loan, and then you subtract the loan in the liabilities. Now, because this is what the regulation says, you can't skip putting the loan and then you just put 370,000 because you're like, putting in so many things, I'm going to, I'm going the wrong way. No, you're not going the wrong way. That's why I say you need to read the regulation, because if you don't read the regulation, then you're going the wrong way. So that is how you deal with loans against a policy. Does that make sense now? And also, when we spoke about loans, what did I say? I mean, when we spoke about life insurance policies, what did I say? I told you that it's only life insurance policies that are paid directly to the estate. So not all, policies rank the same. They don't, because there are some policies that are going to be in the estate duty. There are some policies that are going to be in the liquidation account, and you need to know which one is going to be in the liquidation account. The one in the liquidation account is the one where the deceased is the beneficiary as well. But where there's a nominated beneficiary, we deal with that in the estate duty addendum. So are we okay with policies as well as loans? Okay, I see that you've got it. Now let's go to where the deceased has ceded the policy to a bank or similar institution as security for a debt. The ceded amount will be reflected in the liquidation account, and the residual amount will be paid over to the beneficiary and be reflected in the estate duty addendum. So we've got a ceded policy. And the set of facts is going to tell you that this is a ceded policy. So you won't have to think and scratch your head and say, oh, maybe this is a ceded policy, maybe this is not, maybe no. The set of facts will tell you what it is. Then you also have fund benefits. Guys, this is important because a lot of people get this one wrong. Fund benefits don't form part of the liquidation account. I'm talking pension fund, provident fund. This is in terms of Section 37C of the Pensions Fund Act. So as you're writing your assets, as you're listing your assets in the L&D, in the liquidation part on the assets, and you come to assets reduced to cash, and you're like, yes, pension fund, let's put there on debit. No. The Pension Funds Act says that you cannot do that. So that is excluded. Now, I want to deal with shares. Because remember, we are fine with movables, that you have to use the DVD principle, as well as, we are fine with immovable, we are fine with movables, right? I'm going to come back and speak a little bit more on the movables. And then assets reduced to cash. Now, with assets reduced to cash, right? Let's talk about shares. Yes, let's talk about shares. We'll get to investments. Let's talk about shares. So you must be careful. You must know the theory behind the shares, because you might err where it is unnecessary. So with shares, where the shares are sold for a different amount than that of the value provided by the auditor, the realized value, which is the sold price, must be reflected in the liquidation section. And in the estate duty addendum, the difference between the appraised value and the sold value will be reflected. This sounds so complicated until you actually do it and you're like, no, it's not. And then it says, if sold for less, the difference must be added to the EDA. But if sold for more, the difference must be subtracted in the EDA. Now, obviously, we'll deal with that, when we get to the estate duty addendum. But for purposes of the liquidation account, where shares are sold for a different amount, the set of facts will let you know. It will say that the shares, let's say at valuation, they were worth 1,000, but then the executor sold them. He sold them for, 3,000 Rand. In the liquidation account, you don't put 1,000. In the liquidation account, you put 3,000 because according to the regulation, you need to put the realized value, the sold price. So that is what you will put in the pot where you have to put shares. So if the shares are not sold, you put the amount that you have been given. So when it comes to shares, don't read the question and say, okay, well, these shares weren't sold, then you skip them. No, you don't skip them. If the shares have not been sold, you put them there an asset. Right, here I said if shares are valued by an auditor and approved in the amount of 100 Rand but sold in the course of the administration for 120, then the sum of 120, because that is the sold price, will appear in the liquidation account. But in the EDA, the amount will be adjusted by deducting the 20 Rand to calculate estate duty. If shares in a private company are sold, the gross realized value appears in the liquidation account, but in the EDA, the auditor's valuation takes precedent. Now, when we get to the EDA, that's when you will see that the difference between shares in a private company and a public company are important. But now, for purposes of the L&D account, you're good by knowing this information. Now we come to investments. Always remember the theory. These things, very simple. With investments, you take the capital. So let's say the deceased invested 100 Rand, and then the interest as well, and then the interest was 20 Rand at the date of death. So where will that be reflected? I'll take this example again. You've got an investment where the deceased invested 100 Rand, that is the capital. And then the interest that accrued was 20 Rand, interest at the date of death. Where will these things be reflected? Where will you put the 120 Rand? Interest in the income and expenditure, interest will be in the income and expenditure. No, guys. You don't put that in the income and expenditure. No. You know why? You must read the set of facts carefully. This is capital, like I said, the person invested 100 Rand. The interest at the date of death. The interest at the date of death, not after. At the date of death. Therefore, that will be in the liquidation account. And then where the interest after the date of death will be reflected where? Income and expenditure. That's why I say when you read the set of facts, you must read the set of facts carefully, because this is where you can lose marks unnecessarily. Liquidation account, always remember, at the date of death. Income and expenditure after the date of death. Remember that example that I made with the insurance policy, with the deceased dying on the 15th of March and the policy paying out on the 18th. You don't take the policy because it was paid out on the 18th and you say, yes, the 18th is after the date of death. Therefore, I will put it in income and expenditure. No. How do policies work? It's date of maturity. The policy matured on that date. So dates that come after the 15th, everything that comes after the 15th, then is dealt with in the income and expenditure. So remember this, super important. Do we understand assets reduced to cash? Do we understand? Are we confused? Must I take it again? I'm guessing yes. Yes is for I understand, right? You understand, or should I take it again? Okay, Belinda says, I'm okay. Okay, I'm guessing that now you understand. I'm going to ask you questions. I want to see if you understand because this is serious. Right. Let's say you're listening, right? Let's say that the deceased took out a loan against the policy. The proceeds are 10,000 Rand. The proceeds of the policy are 10,000 Rand, and the loan is 50,000 Rand. How do we deal with that? Where do we put amount? Where do we put the amounts, and which amounts do we put? So the deceased takes out a policy, and the proceeds of the policy are 10,000 Rand. Then the deceased takes a loan against the policy and they receive an amount of 50,000 Rand. How is that recorded? Let's see if you really heard, if you understand. We've got 60,000 in the liquidation account. That's correct. And then what else? Yes, that's perfect. That is how you deal with it. So you will have 60,000 in the L&D account and 50,000 in the liabilities account because that 50,000 Rand, we cannot distribute it to the heirs. It does not belong to the deceased. It's a loan. Right. So when it comes to let's take it back to movable property. Even with movable property, use the DVD way of doing things, the way of describing things. Don't put the BMW 1 Series and then you put the voucher number and you put the amount. No, write the full description of the car. You have to put the registration number and then you have to put the amount, and you also have to put where it's going to. Where there's a will, obviously the will indicate where that property is going to. If it is Usually in the set of facts, they'll also just let you know that it goes to this person. So you'll put it there. But remember that you now know things such as in community of property. Now, with movable property, you wouldn't say it goes to the surviving spouse. You don't say things like that. You'll write there and then at valuation, you put the amount. And then when it comes to the bequeath, you look on the set of facts. Don't assume where it is going, unless if the set of facts tell you that there are no descendants. There are no descendants of the deceased, only a spouse. Then you remember what we discussed this morning. That, Section 1 of the Interstate Succession Act says that where a deceased passes away and they only leave a spouse and there's nobody else, what happens there? What happens is that they will inherit all of the estate. So you must also always keep these things in mind. Just because these sessions have been divided into categories, it doesn't mean that they don't overlap. So you must also remember that which you have learned, from last night as well as this morning. Okay, so we are fine with movable property. And then when it comes to furniture and household effects, the DVD principle sort of slacks when it comes to that, because if you are, writing furniture and household effects, that's already the description. Don't now force it, because on the immovable and movable, you've been describing things in detail. Now you want to write furniture and then, put there chair, brown, this and that. No, with the furniture, don't stress too much about that. You can just write furniture and household effects. That is sufficient. And then add valuation, or if they have been sold, then you put the amount that they have been sold for. Remember, when it comes to selling things like shares as well, you will put the realized value, which is the sold price. Remember that when things are sold, keep this in the back of your head, that when things are sold, when property is sold, there's also going to be fees, because people are not going to help you sell these things for free. There's also going to be fees that you incur. So you need to put it in the back of your mind that if you've got properties that have been sold and stuff, you will also have expenses relating to the selling of the property, which you will deal with in the liquidation account. Right. So you see here it says where the executor in liquidating the asset has sold the movable asset, the gross proceeds of the sale before expenses must be in the liquidation account, and then the expenses will be in the liabilities account. So here you don't do it how you do the loan. You don't say the gross proceeds of the estate and then you add the expenses. No, you just put the proceeds of the property. Because if it's a chair, it has been sold for 200 rand, then you put there 200 rand. And then in the liabilities, you will write the expenses, you'll write the expenses relating to selling whatever it is that you sold. Are we okay with assets, liabilities, assets reduced to cash? Are we okay with the asset part of the liquidation account? If I give you a past paper now, or I give you the paper and I say, just write the assets for me, would you know how to deal with them? Would you be confident to put in the assets and the L&D account? Guys, we will take quite a bit of time when it comes to the L&D account. So don't be scared to, to write your question in the chat box, because this is important. If you write, like, you just form your own things because you're scared and you feel like your assets are not enough, and you're like, oh, how can one person have 3 assets only? If it's like that in the fact, it's like that. Don't add additional information that's not necessary. So that's what I want you to know. So just know, how to write assets, because you also get marks for writing the things correctly. So I will not catch you having L&D accounts that don't have voucher numbers, that are confusing. You don't know if this is the debit side or the credit side. No, those are things that I don't expect you to be doing in the exam. Maybe other people, but not you. Right. So we are okay with assets, we're okay with investments, life assurances, insurance policies, shares, and the like. Now we move on, because now we've dealt with the assets. Now we move on to the liabilities. The liabilities are, put in they are grouped into three categories, three headings. Those are administration expenses, claims against the estate, as well as estate duty. Right. This is important. You must know that the liabilities are an exception to the rule that expenditure incurred after the date of death must be reflected in the income and expenditure account. They include advertising costs, bank charges, security bond, executors' fees, valuation costs, cost of realizing assets, cost of transfer, bond cancellation costs, cost of preserving assets, and those things. And then the master also permits post and petties limited to 150. If you get a set of facts and they're like, oh, post and petty is 151 Rand, and you put 151 Rand in the exam, it means you don't know the theory. The theory says the master limits on 150. If petties and postages are 151 Rand and you put 151 Rand, it means you don't know the theory. So you need to know the theory and know that the cap is 150 Rand. Now let's get to master's fees. Highly examinable. I've seen it quite a lot of times in past papers. Now, obviously, when I say this, I've never said a board exam paper, so don't be like, I got an email one time, somebody saying that was the previous board exam session. Somebody said that, oh, you said this is highly examinable, but it did not come out in the paper. And I had so many questions. Like I had so many questions, but I did not reply because I mean, what am I supposed to say? When I say something is highly examinable, I'm not saying that I have set the paper and that this is what I asked in the paper. No, what I'm saying is that I've seen a past pattern of this thing being asked in the exam. Whether you decide to place emphasis on it or not, that's your prerogative. But I think it will be really, really dumb to get something that was emphasized wrong. Does that make sense? So let's now move to master's fees. Super easy, easy stuff. I hope you've got your pen and paper ready and your calculator so that we can do this. So what does the Act say? What does the Act tell us when it comes to master's fees? Estates with a value of less than 250,000 are exempt from paying master's fees. So if you get an estate that is worth 249 Rand, 49,999.99, don't pay master's fees because you are not exceeding the 250,000 Rand threshold. And then between 250,000 and 400,000, it is 600. So between 250,000 and 400,000 is 600. Let's stop there and discuss this one. So if the estate is worth 300,000, is it still 600 or is it not? Is it still 600 Rand for master's fees or is it not? If the estate is 300,000, is the master's fee still 600 Rand? Yes, no? Yes, it's still 600 Rand. Uh-uh. It's not 800. Wait, it's not 800. Let me take this one again. If an estate is between 250,000 and 400,000, whether the estate is 39999.99 or whether the estate is 251111111, if it is between 250,000 and 400,000, don't make calculations. The regulation says it's 600, therefore it's 600. That's how you deal with it. And then if an estate is, so now we are on, we've got the 600 part. We understand the 600 part, right? And then a further 200 rand for every completed 100,000 rand of the estate value. So what does this mean? For every 100,000 rand on the estate value, you add 200 rand to the master's fee. So as you can see, when it comes to paying master's fees, the minimum fee is 600. And the 600 only comes when there are estates between 250,000 and 400,000. So if an estate is 249,000, then it's 0. And then you add 1 rand to that estate, now it falls into the 600 portion of things. Do you understand? So that's the minimum, obviously 600 rand, and then the maximum being 7,000 rand. And where the maximum is reached, that is where the estate value is 3.6 million rand. Right. Let's do this example. What is the master's fee payable in an estate worth 2 million rand? Let me give you a little bit of time to calculate that one. What is the master's fee on an estate worth 2 million rand? Based on what you know now about master's fees, how is this one done? Can I hide this thing? Oh. 3.8 is payable in an estate worth 2 million rand. How did you get to the 3,800? Are you sure it's 3,800? Okay, I'm getting 3.8. Does anybody have a different amount, or are we all agree that 3.8 is the one? Okay, I'm getting 7,000. I'm getting 1,800. Are these the only answers? Okay, Umbe says it's 3.8. Okay, let's go through this and see what the answer is. Right. What does the theory tell us? The theory tells us that from 0 to 250,000, you paid nothing. You don't pay. Then from 250,000 to 400,000, you pay 6 600. So what do you write? You start writing 600 rand until the 400,000. Now you must calculate how many completed 100,000s there are to get to 2 million. How many completed 100,000s are there? Now we are on 400,000. You start, if you want, you can use a calculator. If you want, you can use your hands. They work just fine. So you say 400,000. Now you start counting. How many 100,000s are there? You count. If a completed 100,000 makes 500,000, 600,000, 700, 800, 900, 1 million, that's 6. And then 1 million to 2 million, it's 10. So it's 16 completed 100,000. And what does the theory say? The theory says that for every completed 100,000, it's 200 rand. So now, remember, you started with that 600 rand because you start counting from after 400,000. Now you started with the 600 rand. Now you've got 16 completed 100,000. So you say 16 times that 200 rand, it gives you 3.2. You add that 600 that you got there. So you pay 3,800. 3,800. I'm seeing a lot of people didn't get the answer right. Now that I've explained it, do you get it? So it's not 3,600, it's 3,800. Do we understand how we got to 3,800, or must I take this again? Are we okay? Are we agreeing, or am I wrong? I could also be wrong. Okay, I should do it again. Let's start again. Right, let's start again. Take out a piece of paper so you can write. There's something about writing that also just adds to everything, to you remembering what you're doing. Right, you look at the theory. The theory says what? The theory says from 0 to 250,000, you don't pay. So if an estate is worth 100,000, then you are not liable to pay master's fee. Second step, if the estate is between 250,000 and 400,000, you pay 600 rand. Now, based on the example that I gave, that estate is worth 2 million. So 2 million has 400,000 in there. It has 400,000 in there. So we cannot skip the second thing, which is looking at between the 250,000 and 400,000. We can't skip it because 400,000 is in 200, is in 2 million. You do find 400,000. So now for getting to 400,000, you pay 600 rand. You put that one aside. It's 600 rand. Then the regulation further states that for every completed 100,000 from the 400,000 to get to the 4 million, so the difference between the 400,000 and the 2 million, for every 100,000, you will pay 200. Now, because you already have the 600 on the side, that means that you have paid master's fees so far. Although you haven't paid everything, that means you have paid master's fees for a portion of the estate, which is 400,000 of the estate, which is 600 rand. So you put that one aside. So when you start here with this thing that you put 600 rand, it's because it accounts for 400,000, which is part of the 2 million. So now when you assess the 100,000 that have been completed, you start from 400,000, because remember, all the other parts of your estate have already been accounted to. You have paid that 600 rand. Yes, that's 600 rand. Now you start counting. You can use your hands work, your fingers work just fine, or your calculator. I usually use my hands for things like this, for basic stuff. You'll always see me doing this because that's how I'm sure that I got it. So now that you have accounted for the 400,000 rand in your 2 million rand estate, that is 600 rand, you put it aside. Then you start counting. How many completed 100,000 are there for me to get to 2 million? Then you say 500,000 is one, 600,000, 700,000, 800,000, 900,000, 1 million. You've got six completed 100,000 to get to a million. Now, from 1 million to get to 2 million, how many completed 100,000s are there? There are 10. So 10 plus 6 is 16 completed 100,000. And what does the act say? The act says that for every 100,000 it's 200. So you will say 16 completed 100,000 times 200, which is 3,200. Then you take that 600 rand, you add it to the 3,200, then you get 3,800 master's fee. Are you understanding how to calculate master's fees? Okay, one person understood. Do we all understand? Let's do another example to see that you have understood. Let me put in there. Right. Let me see. Does everybody understand? I want to see that everybody understands. Then we can move on. Now I'm giving you a different example because I can see that it can be a bit dribbling. So now, let me say, okay. Are we all getting it, guys? Please reply. Now you have an estate with, okay, got it, got it. Are we good? I'm giving you examples now, so listen carefully, and then we can see if you really understood or you're just saying because people are saying that they understood and you don't want to feel left out. Let's see if you really understand. I'm going to give you two examples. Now let's calculate the master's fee where the estate is worth 4.2 million rand. Now you know the theory. Now let's calculate the master's fee where the estate is worth 4.2 million rand. That is 4200 and then three zeros, 0.00. Let's calculate the master's fee. Let me give you a little bit of time. Okay, Rosalia is getting 3.8. Okay, one person is getting 3,800. Reina says, got it. So is everybody getting 3,800 for master's fees? Yes, there's the answer. Guys, remember what the theory says. 7,000 Rand is the maximum. 8.2. No, 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 no. 8,000 Rand to 8,200. No, no, no. Penny, no. 7,000 Rand is the maximum. And that is where the estate is valued at 3.6 million Rand. So any estate that is above 3.6 million Rand, you already know that the max, which will apply when an estate is 3.6 million Rand, will apply. So if you get the calculation of master's fees and they say 4.2 million Rand, you can still calculate it. That's okay. But if you get an answer above 7,000 Rand, know that 7,000 Rand is the max. 7,000 Rand is the max. Yes. So if you get a master's fee of 10,000 Rand, you remember that 7,000 Rand is the max. Now, let us deal with an estate where the amount that the estate is worth 2,480,000. 2,480,000. How much are you going to pay for master's fee? Ah, no. You see, when you are saying 7.2, you're now stressing me. Mangoba, you're stressing me now. Anything above 7,000, guys, if your answer is above 7,000 and you don't say 7,000, you're going to stress me. I'm getting 4.6. I'm getting 5,560. Okay. None of these amounts are as stressful as 7,200. No, 7,000 is the max. I'm getting 4.6. Okay, let's do the calculation. 0 to 250,000, you don't pay anything. 250,000 to 400,000, you pay what? You pay 600. Now you come to calculating the completed 100,000. Like I do it with my fingers. We are on 400,000, then I will say 500,000, 600,000, 700,000, 800,000, 900,000, 1 million plus 10 is going to be 2 million. So how many have I counted? I counted 16. Me, I counted 16, 100,000. And my answer for masters, because it's going to be 16 times 200, which is 3,200, and then plus that 600 is going to give me 3,800 Rand for master's fee. Who doesn't understand why I got to 3,800? Explain why you don't. Explain why that answer is wrong. Explain why 3,800 is wrong. If you got 3,800, explain why 3,800 is wrong, because 3,800 is wrong. I see what you did there, and that's not what you're supposed to do. Those of you who got above, those of you who got above 3,800, I'm still coming to you, but 3,800 is wrong. Why is 3,800 Rand wrong? Because the theory says for every completed 100,000. Now we've got 2,480,000. So you calculated, if you got 3.8, that means you calculated until 2 million. That's okay. That's part of the answer. It's not all of the answer. So from there to get to 480,000 is 1, 2, 3, 4. It's 4 completed 100,000s. So meaning that it's supposed to be 20 times 200. So 20 times 200 equals to 20 times 200 equals to 4,000. It's equals to 4,000. 4,000 plus what? Plus that 600 Rand that you put aside. So then the final answer is 4,600. What else am I seeing? 4,760? No. No. 3,800. I see what you did there. You ignored the 480,000. Remember, the theory says for every completed 100,000 and 2 million. This the example that I gave you is not 2 million. It's 2,480,000. So there are how many? 4 completed 100,000 in the 480,000. Now, what about the 80,000? You have accounted for the completed 100,000. You have found that it is 20 completed 100,000. What about the 80,000? What about it? Do you pay anything on the 80,000? Do you leave it at that? What do you do? Guys, let's talk about that 80,000. That's just like chilling. What do we do with that 80,000? How much master's fee are we going to pay on that 80,000? We leave it. Yes, guys, we leave it. We leave it because the theory says every completed 100,000. 80,000 is not 100,000. So we leave it. We leave it at that. Remember, a completed 100,000, not part of 100,000. No, a completed 100,000. So when you're reading the question, make sure that you understand what they are asking you and look at the amount and remember the theory. Remember that from 0 to 250,000. Wait, from 0, yes, to 250,000, you don't pay. From 250,000 to 400,000, it's 600 Rand. And then a further 200 Rand for every completed 100,000. Remember, maximum, wherever you see yourself and you are calculating and you are running up there and you're on 8,000, 10,000, know that you just have to put 7,000 Rand. That is the maximum. Wherever you find yourself calculating and the numbers are high up there, know that the maximum is 7,000 Rand. And what I like about this is that you know that 7,000 Rand comes from a 3.6 million Rand estate. So if in the, in the set of questions, you get something, you get an estate that is worth way more than 3.6 million Rand, or an amount, over 3.6 million Rand, you already know that the max applies. You don't even need to do calculations. You already know that, if the estate is 3.7 million Rand, 7,000 Rand. That's just it. Yes, it does not, make the threshold of 100,000. That's correct. Do we know how to calculate master's fees, or should we take it again? Are we okay? Are we fine with master's fees? Okay, I'm getting one. Okay, good. Yes, I'm. You don't pay for it. All right, so we are fine on um, master's fees and how to go about it. Now we come to executors' remuneration. Theory that you must also know. You know what? Before I get to executors' remuneration, I'm thinking that there's a lot of theory to know for these things. You guys just let me know if my suggestion would work for you, right? I'm thinking because there's a lot of theory to know for the L&D account. I mean, you can see it's easy, but there's just a lot of theory to know. I was thinking that, we stop wherever we can stop. And then tonight you will practice past papers just on the parts that we have practiced or the parts that we have done tonight. So that tomorrow, when we continue with another portion of the L&D account, then you will know that this part I've mastered. Like, for example, if we stop now on the liquidation account, you know how to do assets and you know how to do liabilities. Like, nobody can tell you. You know how to do assets and you know how to do liabilities. And then tomorrow we move on to another set of something else. So that when we add on to what you know, things become easier. I don't know if you guys would want me to do that, or we're just going forward. And that one also, I think option B is also not going to work. It's not practical because it's already we've already spent like over 1 hour 40 minutes, and it's going to be so annoying for you to rewatch something that's like 5 hours. Do you get me? So I'm thinking that we stop where we stop. Maybe we can perfect the L&D account. We perfect the liquidation account, so you know exactly what you put in the assets and the liabilities, and then tomorrow we'll continue with something else. What do you guys say? Okay, you guys can write the answer in the chat box. Let me continue with executors remuneration. Because I don't know, it just makes more sense to me. For you to It makes more sense to me that wherever we stop, like let's say we just do the liquidation account, and then on everything, what you know is the liquidation account. And then that's what you practice for tonight. And then tomorrow when we add on, new theory, it's not going to be information overload. And also when you rewatch this, I don't know if it's just me, but I don't like watching long videos. So when videos like are in sections, it makes things much easier to grasp. And also when things are in sections, you know that I'm just going to watch section, this portion, or I'm going to watch that portion. I don't know if that is making sense to you guys, but that is making sense to me. um yes, brilliantly, you get it. What time is the next lesson? Okay, so I will sacrifice my Sunday. I will do it. I will sacrifice my Sunday, you guys. And tomorrow we can have two sessions like we had them today. But tomorrow we won't wake up, too early. We can't be waking up early in the middle of the week and then early on weekends. No, that's not it. I think if we start a session tomorrow, then tomorrow we can do a session. I think we can do 9 or 10, and then we'll do in the afternoon. Guys, this is a deep sacrifice of my Sunday. You better pass this paper. Like, I'm so serious. So serious. It's a sacrifice of my Sunday. That means you need to pass. As you're studying, remember that, oh, shall I sacrifice this Sunday for us to learn this thing? So I need to pass. So that's what I want for my sacrifice. I want you to pass. Right. Okay, I'm seeing 10. Yay to the not waking up early. Yes, absolutely. Okay. So, yeah. The sacrifice, you guys, you need to pass here. I'm so serious. Okay. And then now we get to executors remuneration. Now, the executors remuneration is set out in the will. If it's not set out in the will, like most people, when we get to L&D accounts, people don't have wills. Now we have to use regulations because there's no will. I'm seeing we will pass. Yes, you need to pass and you need to pass well. Don't fail. So executive remuneration, if it is not set out in the will, which in the paper, I've never seen a past paper where the executive's remuneration is in the will. It's never in the will. Okay, we'll talk about the times later on because I'm also still thinking what time, just to move around my plans and see how I can, how I can just reschedule my Sunday. Right. We've got executors remuneration. If it's not in the will, then you use regulation 8 because the examiners want you to know these regulations. In most chances, you will have to know regulation 8 because they will not give you an executor's remuneration in a will or in a set of facts. All right. So you will calculate 3.5% on the gross value of the assets in the liquidation account. Now, remember that right now we are in the liabilities section of the liquidation account. So you already have a value for the assets in the liquidation account. So don't get here now and be shocked and say 3.5% on what if I'm not even done calculating. No, you are done calculating the assets. You are now on the liabilities. So you will look at the total assets, right? You will look at the total assets and then the executor is going to get 3.5 on the gross value of the assets in the liquidation account. Easy peasy. And then this 6%, it's not, listen to this carefully, it's not 3.5% on the gross value of the assets in the liquidation account and 6% on the gross value of the income collected after death. You don't put the 6% here. Here, when you are on the liabilities of the liquidation account, the only thing that you do when it comes to the executor's remuneration is 3.5% is what you do on this part. That 6% only comes in because it's now on the income collected after death that is in the income and expenditure. So keep this in the back of your mind that when it comes to executors remuneration must be in the liquidation account on the liabilities. It must also be in the income and expenditure. In the liabilities, it must be 3.5% of the gross assets in the liquidation account. And then in the income and expenditure, it must be 6% of the income collected after death. So it comes in two ways. Don't put 3% and 6% in the liquidation account. No, this is self-explanatory. Remember this. And then minimum fee of 350 Rand. And then you put in VAT if the executor is a vendor. Guys, what is the VAT percentage now, currently, as it stands? What is the VAT percentage? What percentage are you going to use in the exam? You don't create your own percentage. This is given to you. What is VAT now? Is it 10%? Is it 15? Is it 14? Yes, it's 15%. Now, I remember when I wrote, I think it was this paper, and the VAT changed about a week or so ago from 14 to 15. Some people didn't know, but apparently, because we don't get to see our papers, apparently, if the VAT changes, within the space of like a month before you write board exams, you will not be penalized for using the old percentage. But don't do that. Know what the VAT is at the time that you're writing exams. Don't rely on that because I don't know how true it is. It would be true. I would say it would be true if I had my paper with me, but you never get to see your paper. So know what the VAT is by the time you're writing your exams. Now, when you are writing, when you are doing the executor's remuneration, when you're doing the executor's remuneration, let's deal with it practically. We are now on, we are not on income and expenditure, so leave that one. We are on the liabilities of the liquidation account. Liabilities of the liquidation account. Right, you've got your total. You've got your total, and then they say you need to calculate 3.5% on the gross value of the assets. Now let's get to the columns. Now, first column, what do you put? Executors remuneration is what you put in the first column. The next thing is you put here, you put here the voucher number, maybe it's number 16, then you put there 16 in brackets. Follow the regulation in brackets. Then you come here. Remember this um this column is optional. Remember when we said that this column is where you can show your calculations. It's not, like a compulsory column. Here you can say, you can put like your little calculation, and you can say 3.5 times whatever the gross amount is. And then here on the credit side, because obviously that's where liabilities are, then you put the right amount, because this is the column that they're going to mark. I like using this, optional column, because if I see that my things are not balancing, then I can go here and just check what I did and what I did incorrectly. So then you will put in the credit side that amount. That's how it looks. Simple, 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 simple. Then if, guys, big if the executor is a registered VAT vendor, then you can put in the VAT, calculate the VAT. But if the set of facts don't say anything regarding the VAT vendor, don't put it. If they don't say the executor is regarded for VAT, don't try to act smart and show the examiners that you know that VAT is 15%. No. If they don't say anything about VAT, don't put VAT. But also keep your ears open, because I heard that some amendments come via announcements in the exam room. But anyway, that was such a dry joke. Anyway, now we get to estate advertisements. Wait, before we move on to the advertisements, do you guys understand executors remuneration? Do you understand executors remuneration? Are we okay with executors remuneration? Okay, we're good. And I shouldn't even be making jokes about the legal practice council, because I want to be an examiner, guys. I want to teach this thing. So I shouldn't be doing that. The LPC is my potential employer. I need to behave. Can we do an example, please? Yes. I like people who want examples, because it shows that you want to pass. Now, let's say the the assets in the liquidation account have come to 900,000, right? The assets have come to 900,000 in the liquidation account. Now you are on the liabilities section of the liquidation account. How do you calculate? How do you know how much you need to give the executor? So you must find out what 3.5% of 900,000 is. What is 3.5% of 900,000? What is the 350 minimum? Okay, what is the 350 minimum fee about? Does it apply to both executors' remuneration in the liquidation account and in the income and expenditure? Yes. So the executors remuneration cannot be less than 350 rand. It cannot be less than 350 rand. So that is the minimum fee. But also when you calculate, with these amounts that they give you, it'll never be less than 350 rand. So, that is the minimum. And then another question is, can you provide an example of it, even if include VAT and without VAT? So I said that where it doesn't say anything about VAT, leave VAT. Now let's talk about this. Now we are excluding VAT. Let's start where there is no VAT, and then we continue with that. First example, 900,000 without VAT, and then second one with VAT. Let's calculate. Starters, what is 3.5% of 900,000? Right. 900, 1, 2, 3. Okay, we've got 31,500 rand. Where do you put this thing? You put it in the credit side. 31,500 will be in the credit side because that's the executor's remuneration. After that, you don't go to the 6%. You leave the 6% because the 6% is only applicable when you get to income and expenditure. Then, example number 2, same amount, but now the executor is registered for VAT. Let us calculate. So, wait. When we get to this optional column, what you put is, let's say where there's VAT, you put 31,500, ne? And then you will also put the VAT amount over here. Can you guys see? And then you will add the two. It will create the remuneration. I will take it again. When there is VAT, that 31,500, you put it here. You don't put it here if there's VAT. You wait. You put it here. Then you calculate VAT. You also put VAT here. Then you add the two, because now if there's VAT, if they say you must calculate VAT, you can't not add it into the executor's remuneration. So then you add the two and then you put it here on the credit side. Now let's do that example with VAT. And you said VAT is 15%. Okay. All right. What do we put in? Right. What do we put in this optional column here? We will put 31,500. Obviously, for those of you who don't want this column, you can write this somewhere on the scrap. So you put 31,500 plus 4,725. How do you calculate that? You calculate 15% of the income. You don't calculate 15% of the assets. No. 15% of the remuneration. Then it'll be 31,500 plus the 4,725. What is the answer? The answer is 36,225. You will put it here on the credit side. If I catch you doing otherwise, Hmm. Are we okay? Rosalie, are you okay? Are you getting it? Are we fine? Okay. So that's how you calculate the executor's remuneration. Same step where you get to income and expenditure, but then obviously it's going to be 6% and not 3.5%. Okay, let's go. Estate advertisements. Important. Important. Don't skip these things because they are important. Don't skip the advertisements because they are important. So these are two statutory notices which must be advertised by the executor in a local newspaper and the government gazette. You've got the Section 29 advertisement, which is a notice to creditors, and then a Section 35 notice, which is, the L&D account lying open for inspection. You can't choose and say, I'm only advertising in accordance to Section 35 or Section 21. No, it's statutory. That's what the Act. If the Act says something, don't argue. Just know it and do accordingly. Right. So this is easy. How is this reflected? They will usually give you these amounts because how would you know? And they can't say make up your own amounts because if you make up your own amounts, that means when they mark, people's answers are going to be different and people's answers need to be the same to show that, they understand the content of the work. It's super easy. You'll put their Section 29 advertisement to creditors, the Citizen, and then Government Gazette. So like you see here, the optional column you put there 29 rand because that's Government Gazette, and then the Citizen or whatever newspaper. I mean, they'll probably give you the newspaper. If not, just make up your own newspaper, and then you put the amount, and then obviously the total will be in the creditor side. If you don't have this option, you'll just put the total over here. Then you add wherever you decide to add. And then the second advertisement is Section 35 advertisement. And also, when it comes to advertisements, it, it's not optional. You can't say, okay, I'm advertising in the Government Gazette, and then next time I'm going to advertise there, then next time I'm going to advertise there. No, you advertise in the Government Gazette, that is according to the Act, and you advertise in one local newspaper. So that is what the Act tells us. So here, you can't just say Section 35 advertisement, Government Gazette. It can't just be Government Gazette because according to the Act, it needs to be Government Gazette and local newspaper. Are we okay with advertisements? Are we good with advertisements? I think this one is pretty self-explanatory. All right. Let me see. Let me see where we are. Advertisement amount will be given to you. Okay. Yeah, so this is just an example. I just wrote the amounts. I also don't know how much government gazette is. So Lewis just provided us with the amount for government gazette. Thank you. So it's 37 Rand 82 cents. So I don't know how much that is. So that's the amount. And then if they don't give you them, but I've never seen where you must know the amount. But now that you know the amount, that's fine. Know the amount, because if they don't give it to you, then you know the right thing, you know the right amount. But with government gazette, or sometimes what I've seen actually, sometimes they will give you this amount. They will say that the advertisement, let's say for section 29, amounted to 500 Rand. Now, obviously, you can't put government gazette 300. Government gazette is cheap. Be reasonable when you're putting these amounts. Now that you know that government gazette is 37 Rand, now put 300 for government. No, you can't do that. But if they give you an amount like this, just divide it between the two so that the examiners will know. If you have this column, then the examiners will know that you know that there are two newspapers. And even if you don't have this column, put the Citizen, put Government Gazette. Don't just put 735 advertisement, then you put the amount. No, write the Citizen or whichever newspaper, then you write Government Gazette. Now we come to bank charges. Now we come to bank charges. So Section 28 requires an executor to open a bank account with a South African bank, and this account can go into overdraft. Right. So there'll be bank charges, obviously, and then the bank charges are going to be, on the credit side because they can't fall on the debit. So are we okay with advertisements and bank charges? So just know that when it comes to bank charges, that the bank charges they're talking about the bank charges that form part of the liabilities in the liquidation account. So when you see bank charges, right? When you see bank charges, don't now be confused and say, where am I going to put these charges? No, no, no. You can't be confused to say, where do you put these charges? You put them in the liabilities because they are not an asset. Are we okay with advertisement and bank charges? Guys, are you tired now? The thing is that I want to give you homework. So let's hurry up and get to just the end of the liquidation account, and then I give you homework. I'll tell you which past papers to do. Then you go onto the lead website, you do the past papers. Tomorrow we are going to see if you know the L&D account or you don't. Okay. Now we've got transfer cost and transfer duty. So transferring immovable property to a beneficiary, there's obviously conveyances fees. If a bond is, so obviously with the transfer cost, and all those costs will form under liabilities because they're not an asset. And then if a bond is registered over the property, the bond cancellation cost will also be an administration expense. Then they will tell you if there is a bond cancellation cost, then you can put it in their liabilities. If there isn't, there's only a transfer cost, you know that conveyances fees are a liability. And then you've got funeral expenses. Right. Funeral expenses are reflected in the creditor's claim against the estate and not the administration fee. So remember that when you come to liabilities, you've got these mini subheadings. You've got this administration expenses, you've got claims against the estate, and you also have estate duty. So funeral expenses will fall under the subsection of creditors' claim against the estate. So previously, there's also issues of tombstones. Previously, the master did not allow the cost of tombstones against the estate unless provision has been made for this in the will. However, in light of the amendment to Section 4A, obviously you have to read Section 4A of the Estate Duty Act to know exactly what's going on. which allows the reasonable cost of a tombstone as a deduction for estate duty purposes. The master allows the cost of the tombstone as an expense. So we see that this exception applies to the Estate Duty Act. So, I mean, it applies in the estate duty addendum. So, what does this mean? You will put funeral expenses in the creditor's claim. In the creditor's claims against the estate or not the administration fee. And if there is a tombstone, that will be dealt with in the estate duty addendum. So, in your set of facts, if they say don't don't put the estate duty addendum, you exclude it. That means that this whole tombstone issue will just fall away because you can't put it here on funeral expenses. Now we come to the cost of realization. Wait, are we okay with funeral expenses? Are we fine? Somebody send an emoji, something. Guys, are you tired? Don't be tired. We're literally almost done. All right, cost of realization. This will be like the valuation cost and things like that. So these are the fees that are charged by auctioneers, the estate agents, and stockbrokers to sell the assets in the estate in order to make them liquid. They are regarded as administration estates. So, for example, this right here, BJ Sachs appraisement of movable assets, and then you put items 4 and 6. Do you guys see why you have to put things like that? You have to put the voucher number, because now when you get to this part and you don't have voucher numbers, then what are you going to put? Your entry won't even make sense, because you will put appraisement of movable assets, and then you must list the movable assets. No, that's not what you're supposed to do. This is how you put it. Then you put item 4 and item 6. Nice and easy. And then this is item number 24. And then BJ Sachs, you paid 1.950. Locks and bonds, appraisement of immovable property, that's item 1, and then you put it there. Stockbrokers commission, the selling of shares, you put the voucher number, and then you put it over here on the credit side. Are we okay? Dylan, are you overwhelmed? This is just the liquidation part of things. Don't be overwhelmed. Once you grasp the theory, you'll be able to do this. So I just want this right now to just finish the liquidation account, and then I'll just tell you to do past papers. Tomorrow when we start with past papers. We've got claims against the estate. Remember the three headings. Funeral expenses, they're going to be where? Claims against the estate. So they're going to be here on this side. Then we've got diverse claims. Diverse claims are the debts during the deceased lifetime. So your clothing account, your bonds, like a cell phone contract as well, this falls here. This falls here, and it is called diverse claims. So pretty self-explanatory. And then you've got maintenance in respect of minors, and then maintenance in respect of surviving spouse. So the duty of maintenance does not cease upon death. However, the maintenance claim can't compete with the deceased creditors. It's only after the creditors have been paid in full that maintenance can be met. So if there isn't enough money for both creditors and maintenance, creditors take precedence. And when it comes to maintenance, it is only justified if the surviving parent is unable to support the child. So if the surviving parent is able to support the child, no, you cannot have a claim for maintenance. And then know that creditors rank higher than the maintenance claim. You've got maintenance in respect of surviving spouses. This is pretty simple. They will put it there in the set of facts. Then they will say maintenance for a surviving spouse. But that, like the one for minors, it does not rank high. So, that you'll be given this in the set of facts. So it's also just pretty self-explanatory. And then you've got marriage claims. Where the parties were married in community of property, the surviving spouse is entitled to one half of the common estate and is reflected in the distribution account. Where the parties were made out of community of property with the accrual system and the deceased had a bigger accrual, half of the accrual will be rewarded to the surviving spouse in the liabilities account. So when you're dealing with an estate where the parties were married in community of property, you don't put anything in the liabilities part. But where there is accrual, and then the deceased had a bigger accrual, then this must be reflected in the liabilities account. So far, are we okay? And then funeral expenses, we just dealt with it, that it must be in the creditor's claim and not in the administration fee. Are we okay with that? We're literally at the end of the liquidation account. Guys, let's breathe in, breathe out. And the next, let's wrap it up. Let's wrap it up. I can see even participation is dying. People are tired. You guys are tired. I'm not laughing at you. I'm laughing at the situation. Okay. Then we've got income tax and capital gains tax. Know this. Know that even after you have died, you are liable to pay tax. Income tax from the period of 1 March of the year that the person dies to the date of death. You're still liable for tax. So income and capital gains tax is paid in addition to the estate duty that is also payable by the estate of the deceased. Right. So when it comes to income tax and capital gains tax, you see, yeah, there's also estate duty that is payable by the estate. We're going to deal with estate duty tomorrow. So now, what we have dealt with is the liquidation account and how to put the different assets, how to calculate the master's fee, the certain caps that apply, and how to calculate the executor's remuneration and things of that nature. So now, if you are asked to do the starting part of the liquidation and distribution account, you will know what to do. You will know what to do. So now, because you will know what to do, and because we are having another session tomorrow, let's make this interesting and let's, get you to pass because we know. So when you are doing now the L&D account as you're going to practice, take this theory into account, rewatch this if you have to. Take into account the fact that take into account the fact that we have only dealt with the liquidation account. So tomorrow, when we are going through the past papers, I'm not going to say, okay, what did you write on estate duty? No, the estate duty part, you will leave it. The estate duty part, you will leave it. So let's look at, how many past papers should we look at? 2 or 3? Guys, 2 or 3 past papers is your prerogative now. Throw there 2 past papers or 3 past papers that you guys will do, and then tomorrow we start with going over those questions. 2 past papers or 3 past papers? 3 is fine. 3 is fine. Everybody agreeing to 3? Because now you know the assets and the liabilities, you know how to put the ones is 2. I'm seeing 2. Okay, 2 is winning. Okay. Which past papers, guys? Which ones? Which years? So we are all on the same page. When I end live, all of you are doing the same past papers, and then tomorrow we go through everything together. Which past papers? Throw out past papers. Which past papers? Which year? Are we doing 2022, March and August? Are we doing 2021, March and August? The most recent and an old one. Okay, I don't know if you guys have access to old past papers. So I think let's do maybe 2022, the 2, because there's 2 sessions. Then we can do 2022 past papers. Is that okay? Because these ones you can get on the Legal Practice Council website. That's what I'm saying 2022, because I don't know if 2023 has been uploaded. I'm not sure. So can we do 2022 March and August? Okay, there we go. Homework assignment today. You only do the L&D account. You only do not L&D, the L only, which is the liquidation, account. You will do the assets and the liabilities. And then obviously you will have to skip estate duty because we are not there yet. So you do assets and what we have done so far. Tomorrow you come with it. 2022 past papers, we're doing March and August. Is that fine? Is everybody on the same page? And then now let's talk about the time for tomorrow's class. Tomorrow, can we make it 10 a.m.? Okay, I think let's make it 10 a.m. and then the next session, we'll discuss it in tomorrow's session. Okay, so tomorrow morning, I see you at 10 a.m. and you will have your homework assignment done, and then tomorrow we'll go over everything, and then you can just rewatch this if you get a bit confused with the theory and stuff. And then tomorrow we will start by going over what you did with the past paper, and then after that, then we continue with the theory, because now you know the liquidation account and what is next. um it's going to be assets, liabilities, estate duty, whatever, and then a balance for distribution. Guys, wait. With your past papers, right? You will do what? You will do assets and liabilities, and then you skip estate duty. So if there is provision for estate duty somewhere in there, just put it at 0 for purposes of your homework assignment. And then you come and then you'll say total assets, because that's what I want to know. If your amount is different from everyone else's, it means that there's something that you're doing wrong. So after you have done all of this, right, you will put total assets, you add all the assets, total liabilities, you add all the liabilities, and then estate duty payable, just put 0 for purposes of tomorrow. I just want to know that you know assets and liabilities. And then you put the total, and then tomorrow we'll just work with that. Is everyone okay with that? Is everybody okay with that? Okay, on board. Perfect. I will see you tomorrow. Get started with your homework assignment for tomorrow, because tomorrow when we start, we're not playing. But with this session, did you guys understand the things that I was explaining? Was this session worth, your time? Did you understand the things that I was explaining? Or do you have questions? Or are the questions coming tomorrow? Okay, Penny. All right, perfect. Everybody, are you guys okay? If the liquidation account will be the only thing you write on, will you pass based off of today? Okay, questions will come tomorrow. I still want to rewatch and do the homework assignment. Okay, I understood. Okay, because also sometimes you think you understand until you do the homework assignment and you're like, what should I put here? But do the homework assignment, and then tomorrow we are going to discuss this. We're going to start with that, and then we're going to continue with the L&D account. So till tomorrow morning, ladies and gentlemen, 10 a.m. bright and early. Have a great night. I will see you tomorrow. Bye.